Investors on edge after shaking off a rough start to the year. The government's tough new talk on trade and steel and aluminum tariffs has investors rattled. Joining me right now is the CEO and President of TIAA, Roger Ferguson. Roger, it's good to see you.
Maria, nice to be here. Thank you very much.
Thank you so much for joining us. We want so much to talk to you about because you are the former Vice Chairman of the Federal Reserve. You have been running TIAA now for
about a decade.
About a decade, and the firm is celebrating 100 years.
Yes.
This is really great stuff.
A lot of great things.
Let me get your take on this tariff story and on economic conditions right now. Your thoughts on these steel tariffs and aluminum tariffs?
Look, I think it's unusual, frankly, in the general combine of American economic policy in the last 70 years. We've been trying to push towards free trade. And so many in the economics profession, and I think obviously some in the business community, are waiting to see exactly how this unfolds.
Markets obviously have been nervous about it. You know, they're worried that they're going to see retaliation from other countries. But there's also other nervousness. We're not really sure what's going on with the Federal Reserve right now. As a former vice chairman of the Fed, what's your insights in terms of the broad macro picture right now and this job that the Fed has ahead of itself of unwinding a $4.5 trillion balance sheet?
Well, look, the broad macro picture, I'd say, is constructive, positive. For the first time in a long time, we have growth in almost all of the major jurisdictions, the U.S., Europe, China, et cetera.
That's a big deal.
Which is a very big deal. Corporate earnings still look strong. And the Fed, I think, is in the process of gradually unwinding the stimulus. But I put the emphasis on gradual. Inflation at this stage, though there's still some concerns, has not broken out to the upside. In fact, the most recent readings were slightly below the Fed's target of around 2% or so. And so I'd say, you know, things look reasonably good in the broad macroeconomy with a backdrop of some policy uncertainty.
We're going to get the next wage number next week when we get the jobs number, but we know that in the last employment report, wages were up 2.9%. So do you see that wages are moving higher, creating a tighter labor force than we've seen in some time?
I think it's actually going the other way, which is say
really?
well, let me be clear. The labor force is tightening, or the labor market is tightening. We have unemployment down around 4% or so, which many think may be full employment. And as a result of that, we're starting to see a gradual uptick in wages, which we have not seen in a long, long time.
So do you think that's a good thing, or should we be worried about that? I mean, we've been asking for, you know, higher wages for a long time. We finally get a better growth story. We get them, and then the market freaks out.
Look, I think it's a net positive thing to see wages increasing. It means more money in the pockets of the American consumer. It's the result of a gradually tightening labor market. The question becomes whether or not the market is tightened at such a stage that inflation is really going to break out on the upside. No sign of that just yet.
Yeah, I mean, here we are watching something that's also unprecedented, and that is for the Fed to unwind a $4.5 trillion balance sheet. How tough is that going to be? They've choreographed $50 billion a month at some point, but wouldn't that create disruption?
Look, I think, as you pointed out, you used the word choreographed, and I think that's really the most important thing.
They've got to be transparent.
They've got to be transparent, which they have been. The markets, I think, recognize what's coming. So I see no particular reason why the unwinding of the balance sheet need immediately to leave any kind of disruption. It can be done smoothly and seamlessly, assuming transparency.
And you like the way the backdrop feels right now in the U.S.?
I think it feels very constructive now in the U.S.
Now, you look at the U.S. versus a story like China. China is out with its 2018 economic targets. They're looking at economic growth of 6.5%. You know they'll get there. I mean, it is down from the growth rate of last year, which was 6.9%. But your thoughts on China's incredible rapid growth?
Look, the Chinese growth, I think, has been, as you say, incredible in some ways, rapid certainly, but it's a recognition of bringing that Chinese labor force, one, from the countryside into the cities, and frankly, bringing it into the global markets. And so given where they started, one would expect to see a long period of relatively rapid growth, and that is exactly what they've managed to engineer.